This is Arun, a salaried professional who started his career at 7,500 rupees a month and today has a personal portfolio of around 7 crore rupees. Today, we're taking a look at his investments. Arun has some bold views on investing, especially around what he wants to pass on to his son. His wife, Navya, sees investing a little differently. Let's look at how their approaches come together.
Hi, my name is Arun. I come from a small village called Aino in Shimoga district. I moved to Bangalore in 1999. My primary education is BCom. No fancy tags to my education. I started my career in 2003 with dealing with a manageable salary of 7,500 per month. I switched to 2000 NDS services in 2005. When I moved to NDS, I was administrative assistant, and when I switched my career to Cisco, I was a business analyst. I am with Cisco including my NDS days. My Cisco is 20 years now. Currently, I work as service delivery manager.
What was your first investment when you started earning?
Okay, when I began my career, I started my investment journey in a plot, purchasing a plot, because we didn't know about stocks or any other avenues during that. The family only knew about purchasing a plot, and I constructed my house, me and my brother, in the year 2005. And interestingly enough, my 60% of my salary was going in my EMIs during those days. From that phase to now, gradually I started looking at other things, other investment avenues.
When did you first enter the stock market?
My initial exposure to the capital market was through IPO in Air in the year 2006. I heard about this through few of the finance guys in my office colleagues. And initially I thought IPO itself is a company, but later it is some part of capital investment. Through that, I also started my exposure to ELSS for the tax saving part. After IPO, I started investing in mutual funds. That also pushed me to direct stocks in the year 2008-9.
Why did you move more towards direct stocks back then?
I think it was age. It was exciting to directly look into stocks rather than mutual funds, because I felt that was much easier, or it was more exciting to look into direct stocks rather than mutual funds during those days.
What would you call your biggest investing mistake?
My biggest investing mistake, so to say, is concentrated on stocks, one or very few stocks, which I wouldn't call it a mistake, but I am concentrated more on a particular dividend paying stocks, which is from industry standard, it is more than 10% in a singular stock. I wouldn't hesitate to name the stock. It is ITC, because I see ITC as not one, like more of a 4 or 5 companies into one: cigarette, FMCG, hotels, paper, and also IT. So I look at it as 4 or 5 different companies in one.
When did you first start investing in ITC?
I started ITC journey way 2010, maybe 11. So I've been holding on to. So currently, 52% of my stock portfolio is ITC.
ITC hasn't done well recently. Why are you still holding it?
ITC is currently down notionally, but I'm still happy to hold because it gives me consistent returns in terms of dividends. After 2008, maybe for next 10 years, I have not invested in mutual fund. I was into direct stocks, more specifically into all cash flow stocks: ITC, REC, PTC, Indian Oil. I am a big believer in cash flow.
When did you return to mutual funds, and what do your current SIPs look like?
I resumed my mutual fund journey again in 2018-19 because I thought I was concentrating more on direct stocks. I thought diversification matters much. And my current SIP amount in mutual funds is 55,000 in my portfolio, and another 7,500 in my son's portfolio.
Can you take us through your overall portfolio and allocations?
My current portfolio size is about 6.5 to 7 crores, which includes 45% on direct equity, 30% in mutual funds, 25% in debt and ESPP, and about 5% in gold and other cash instruments. Not included my real estate portfolio here because that's not an asset. Out of my current portfolio investment of 55,000, 60% go to large cap funds, 20% to mid cap funds, and 20% to small cap funds.
Can you give a quick overview of your monthly investments, income, and expenses?
My current monthly investment is about 1.1 lakhs. That includes ESPP, VPF, as well as my mutual funds. That's about 50% of my salary. My average ballpark monthly expense is about 80,000, and the rent is about 37,000.
Do you have any passive income sources?
Yes, I do have my passive income in the form of dividends from direct stocks. My dividends pay for my monthly rent.
Can you introduce your family and how they have been a part of this journey?
Currently I live in Bangalore with my wife and 10-year-old kid. So she has been supportive of my journey in investment. She currently works as HR manager. I think she can introduce herself better and her investment journey.
Hi, my name is Navya Patel, and I'm basically brought up in Bangalore, and all my education has been in Bangalore as such. So I've done my MBA, and my career journey started with talent acquisition, and I currently work as a senior HR manager with one of the MNCs.
How is your investing philosophy different from Arun's?
To talk about my investment journey, it's going to be quite different. You can probably say it a little old school. I believe in more conservative, predictable kind of a thing. So mostly my investments are into maybe the recurring deposits, RDs, part of it, and gold and physical assets.
So roughly how much of your income goes into these investments?
At least with the RD, it's about 25 to 30% of my salary and one monthly income. Apart from that, gold is a little fluctuating.
How do you both manage monthly expenses as a couple?
So from a monthly expenses perspective, I think it's a shared responsibility. So if he's taking care of the rent part of it, or I take care of the other grocery part, or maybe the provisions for that matter, and
House help.
Yeah, the house help, who play a very important role. And apart from that, I think most of our outings or the trips are pretty much planned. So there's usually a separate budget which is kept aside, and so that we're planned in a better way, and so that we don't have any last minute surprises. And apart from that, I think it's more of a disciplined spending than in terms of micromanaging each other. So it's more on those aspects.
Are you closely involved, or do you prefer to let Arun take the lead on the investments?
Frankly speaking, I'm not too much involved in it. Okay. And it's just that here and there when we sit and chat, he just gives me an overview about how things are and what is doing good, which stocks are not doing good, or maybe about the mutual funds part of it. So it's not like, he's more involved in his own line. So he knows his subject. So there it is.
Only stocks she has is the gifted stocks.
Do you try to pass on any money habits or financial thinking to your son?
Yeah, I feel it's important for children to know about finances, and I'm trying to inculcate or impart that knowledge to my son and my nieces. I'm doing this through not gifting any physical gifts to them during their birthdays. I try and transfer shares or mutual funds their stock account, whoever has the stocks. For the last 4 or 5 years, I only gifted stocks or mutual funds to my loved ones.
And Navya, what do you think about such a bold stance?
When I think from my aspect, I mean, having that particular financial knowledge, how you want to probably have the right investments to be done, and that is important for the next generation also. I think that is also good. But yeah, like I said, it's like a culture shock. The culture remains with me. I pamper them with some amount of tangible gifts. So for that matter, I kind of believe in more tangible assets when compared to what he believes in. I mean, he's too foresighted, and his view is way, way, way beyond my thought process. I mean, from a finance perspective. So, as a family, we do have common interests, and we also have kind of like, a diversified way of looking at our investments, or maybe like, in terms of having our own way of investing in the assets part of it. So,
You currently live on rent. Is that a conscious decision?
Yeah, currently we live on rent. It's a conscious decision. I don't want to live on rent for rest of my life, but we also try and invest in a larger real estate portfolio. I mean, but I do have a framework for it. I want to fund this not entirely through my existing asset. I would want to go in for a housing loan, not fund though I have means to fund the entirely, but I would want to use it for my tax benefits, housing loan. Also, pay my EMI through my SWP.
What are your perspectives on FIRE?
FIRE for me is not exactly retiring from work. It's actually a concept for me to be financially free. I mean, I still have 10 or 12 more years of my runway for work. I'm still content. I'm happy working. But FIRE for me is 50 times of my annual expenses. 4% of withdrawal rate in US holds good because of the inflation. In Indian context, it should be less than 2 or 3%. That's why my FIRE numbers relatively look 50 times rather than 25 times conventionally people look at it.
I look at it more from a different perspective. I look at it more from a longevity, and maybe like, keeping yourself occupied. Not that like, with an early retirement that people are not occupied, but I think this is something that I like doing. So I would probably rather stick on, and until I'm good for it, I would probably go in.
Do you have a specific number you're working towards?
Not the FIRE number, but my target is to reach a 10 CR mark in the next 3 years.
How do you balance risk while building towards that goal?
I always analyze my portfolio in the rabbit and the tortoise story. 80% of my portfolio is tortoise. That includes mutual funds, long-term equities, as well as debt instruments. And hare or the rabbit comes in at the 20%, which is direct equities, ESPP, and my foray into unlisted space.
Before we wrap up, is there anything both of you would like to share with the viewers?
One thing that I probably want to say is I'm comfortable in the kind of investments that I'm into currently, and he's comfortable in what he is investing in. So if I had not probably met him, maybe a lot of research would have gone into it before I could start off, or I might not have started also. So now that I have a comfort space where he is already doing it, and even for the others also, that I probably would want to say that before you start your journey like this, or you want to invest in any of these instruments, so do a thorough research, have a good understanding, have a backup, and then go ahead for it.
To conclude, I would like to say you don't need a fancy tag to achieve all this. If I can do this, anybody can do this with slow and steady investments.